Welcome back, everyone, and thank you for joining me again here on the podcast. It's the 19th of September 2025, and today we're going to do something a little different. We're not covering 10 separate news stories or scattering across the market. We're drilling down into one subject that has dominated headlines all week: ETFs. Exchange-traded funds. They've been around in traditional finance for decades, but only in the last year have they truly collided with crypto in a way that is changing everything. First, it was Bitcoin, then it was Ethereum. And now, for the very first time, we have altcoins being wrapped into these products. XRP and even Dogecoin have just made history with their debut in the United States, and the SEC has made a rule change that could flood the market with even more ETFs in record time. This is the beginning of a new chapter for crypto, one that could bring billions in fresh capital, reshape who holds what, and completely change how people think about digital assets. Before we get into the mechanics, the history, and the speculation, let's ground ourselves in the market as it stands. Bitcoin is trading just over $116,000, more or less flat on the day after a quiet 24 hours. Ethereum is around $4,590, holding steady with a slight gain of less than 1%. XRP is sitting close to $3 even, down about 3% after the excitement of its launch earlier in the week. Binance Coin is hovering near $995, showing a small uptick of around 1%. Solana is at $248, up just over 2%. Dogecoin is trading at roughly 28 cents, slipping about 1.5%. Cardano is sitting at 92 cents, holding steady with a modest lift. Tron is just under 35 cents, more or less unchanged. Chainlink is at $24.50, down slightly by around 0.5%. And Avalanche rounds out the 10 at about $33, still positive on the day with a gain of nearly 3%. That sets the perfect stage for tonight's story, because two of those coins have just crossed a threshold none had crossed before. On the 18th of September, XRP and Dogecoin went live as US-listed ETFs. The tickers are XRPR and DOJE. Within minutes, the numbers told the story. XRPR did more than $24 million in volume in its first 90 minutes of trading. DOJE pulled nearly $6 million in its first hour. These are not the kind of numbers you see for failed launches or products with no demand. These are the kind of numbers you see when pent-up demand finally has an outlet. And that is exactly what happened here. Now let's take a step back. What exactly is an ETF, and why does it matter? At its core, an exchange-traded fund is a wrapper. It allows investors to buy exposure to an asset or a basket of assets through a regulated ticker traded on an exchange like the NYSE or Cboe, just like a stock. Instead of opening a crypto wallet, instead of learning how to use a blockchain, instead of worrying about private keys and custody, you simply click buy in your brokerage account and you've got exposure. That simplicity is powerful. When gold ETFs first launched in the early 2000s, they turned a niche market into a global investment trend. Billions flowed in because it was suddenly easy. When Bitcoin ETFs launched earlier this year, the same thing happened. Institutions that could never touch Bitcoin directly could suddenly add it to their portfolios. And now, the same mechanism has arrived for altcoins. Of course, these aren't pure trackers. XRPR and DOJE are structured under the 1940 Act, which means they're hybrids. They hold a majority of their assets in XRP or Dogecoin, but they balance those with derivatives or other funds to meet regulatory standards. That structure means there will be fees. It means the performance may not perfectly mirror the spot price. But for most investors, those details don't matter. What matters is that they can finally access these assets in a way that fits into their normal portfolio. For pension funds, endowments, insurance companies, and large institutions, this is a game changer. They can't open crypto wallets. They can't send money to offshore exchanges. But they can buy regulated ETFs. And now, that includes XRP and Dogecoin. The timing of these launches wasn't random. They coincided with a major decision from the SEC. The regulator has approved new generic listing standards for spot crypto products. Before this, every application had to be reviewed individually, dragging on for up to 240 days. That's why the Bitcoin and Ethereum ETFs took so long. But now, if an asset meets the criteria, if it has a futures market, if it has enough liquidity, if there's proper surveillance, it can be listed in as little as 75 days. That is a complete change of pace. It means Solana, Cardano, Avalanche, Chainlink, and others could all be up and running by the end of the year. The floodgates are open. For XRP, this is vindication. Years of lawsuits, years of speculation about whether it would survive the SEC's wrath, years of being treated as the problem child of crypto. And now, it is a regulated product in the United States, trading millions in volume. That is legitimacy that no marketing campaign could ever buy. For Dogecoin, it is almost comical. A meme coin, born as a joke, now listed on Wall Street as a serious investment product. But the demand was real. $6 million in an hour is no joke. And it proves something important. Narratives matter. Community matters. Even a coin with no obvious utility can command institutional interest if the wrapper is there. But before anyone assumes this means prices only go up, let's talk about the risks. Because they're hybrids, these products may have tracking error. They may trade at premiums or discounts depending on demand. Early on, premiums are possible if demand overwhelms supply, which would be bullish. Discounts are possible if institutions hesitate, which would be bearish. Fees will reduce returns compared to holding the assets directly. And volatility doesn't disappear just because you put something in an ETF. XRP and Dogecoin will still swing wildly. In fact, easier access could amplify those swings, as large amounts of capital move in and out more quickly. The other angle here is derivatives. CME has already announced it will launch options on XRP and Solana futures on October 13th. That's only weeks away. Once that happens, we won't just have ETFs. We'll have futures, options, and regulated funds all trading together. That's the full Wall Street toolkit. Exposure, liquidity, leverage. And when those tools are in place, institutions move faster. They don't just buy exposure. They build complex strategies. They hedge. They arbitrage. They speculate. That adds depth, but it also adds volatility. Solana is especially well-positioned, with futures already established and options on the way. Many analysts think Solana is the next in line for its own ETF. Cardano isn't far behind. Avalanche and Chainlink are also candidates. By early next year, we could be looking at an altcoin product landscape that looks completely different from today. Let's layer in some history. When gold ETFs launched, the price of gold didn't explode overnight. But over time, demand grew steadily, because the wrapper made it easy. The same happened with Bitcoin this year. The first few days were volatile. Some said the inflows were disappointing, but over months billions poured in, and the market adjusted upward. The same is likely to happen here. The launch is a milestone, but the real story will be the flows in the weeks and months ahead. If billions move into XRPR, XRP could easily break $5 and beyond. And if Solana and Cardano get products, they could rally in the same way Ethereum did earlier this year. So where does this leave us tonight? For investors, it means opportunity and caution. Opportunity, because the gates are finally open for institutional capital to flow into altcoins. Caution, because hype always runs faster than reality, and corrections will come. For the market, it means evolution. Altcoins aren't just speculative tokens anymore. They're regulated financial products. For regulators, it means acceptance. The SEC wouldn't be streamlining this process if it thought crypto was going away. As we close, remember this. ETFs are more than just new tickers. They are bridges. Bridges between the decentralized world of crypto and the traditional world of finance. XRP and Dogecoin crossed that bridge first. Solana and Cardano are waiting at the gate. And once enough coins make the leap, the flood of capital that follows could reshape this market forever. The only question is how quickly it happens and who benefits the most when it does. That's where we'll leave it tonight. Drop your thoughts in the comments, smash like if you're bullish, and don't forget to follow for tomorrow's update. And as always, protect your crypto. Grab a ledger with the link in the description, and we will see you at the top.